One of the most important components of financial planning is investing, which is something that we've been talking about on this channel for the longest period of time.
It's been a long time.
So this could be investing in stocks, ETFs, bonds, cryptos, or even real estate. However, we haven't really touched on real estate yet because I don't have much experience there, but hopefully we will soon.
And I would just hope and hope and
So investing is also a pathway to accumulate wealth, and with wealth accumulation, this allows you to build long-term financial security and ultimately allowing you to retire or do what you want to do in life. And the two most popular investment options that are out there are often debated about is investing in dividend stocks or index funds. So both of these investment options have their pros and cons, which will decide ultimately whether it fits into your investment portfolio or will it be part of your investment strategy as well. So in this video, we explore three main differences between dividend stocks and index funds. And we also discuss which ones are best suited for students looking to start investing, young adults who are looking to build a career, and last but not least, people with families who are looking to invest for their children's future. So before we start investing, one of the key things we need is an investment strategy. So this investment strategy will be a guide for us to decide what goes into our portfolio, how long our timelines are, and what is the ultimate goal that we are looking to achieve at the end of the timeline. So this could be a 1-year plan, a 3-year plan, a 5-year plan, or even a 10-year plan. But having that strategy is really important, and having the mindset of I want to invest because I want to be rich isn't really an investment strategy. So what's the difference between a dividend stock and an index fund? So the first thing we gotta understand is what a dividend stock is. A dividend stock is shares in a company. And as a shareholder of some companies, or that particular company in that case, you get a share of the profit, which is referred to as dividends.
Hi shareholders, love ya!
So there are some investors like me who love dividends because I get paid regularly, and after all, I do own a certain amount of stocks in that companies, and therefore I should get some share of the profits.
Want those dividends, don't you?
And with these regular dividends that I collected, it becomes another stream of income that adds to my cash flow, which I can then use to compound into other investment vehicles or to buy back more shares of that same company. So index funds, on the other hand, tracks a specific market index like the S&P 500. So the purpose of the fund is to replicate the performance of the overall market rather than just an individual stock. And with index funds, you do get a wide diversification, which can be helpful during a bear market because of the impact of the low performing stocks that will be balanced out by the high performing stocks. So that's the first difference that we have between a dividend stock and an index fund. So the second one that we have is risk and volatility. So this pair usually comes hand in hand in investing, and there is almost no investment instrument out there in the world that gives you a 0% risk, because there will be some risk involved when you're trying to grow your wealth.
Risk? What risk?
So dividend stocks can provide a stable income during good and bad times, but they are still subjected to market volatility. So one of the dividend stocks that I hold is Disney. And Disney was a dividend aristocrat, but it lost its title due to COVID. So the title of Dividend Aristocrat is given to a company if they have consistently increased their dividend payout over the last 25 years. But for Disney, unfortunately during COVID, they lost the title, which also means that I lost some dividends during that period of time. So this is one of the risks that can happen due to market volatility, causing Disney to not turn a profit, and instead they had to halt dividends just so that they can continue operations. And last but not least, it's time commitment and expertise. So if you're looking to invest in high dividend paying stocks in the hopes of getting good dividends regularly, this comes with a big challenge. So it's very similar to stock picking for growth stocks. You will need to understand the business. You gotta know what the cash flow is like, how the profits are made, what are the margins, and whether or not there is a moat that can protect this business from going out of business. So for a company to consistently pay you as a shareholder a dividend, it needs to have strong financials and a sustainable business model that can withstand the test of time. So granted that most of us are probably working and investing on the side to supplement our income, picking individual stocks to invest in is possible.
That's possible, very possible.
But this will require you to have time and effort to do research, read the news, and also study the financials of a business. So on the other hand, we have index fund, which is a little bit more passive. So with index fund, there are fund managers actively tracking the market and rebalancing the funds, ensuring that investors get the best yield possible within a risk profile that the fund offers. And needless to say, this is a much easier option for beginners who are looking to start investing, because all the groundwork is done for you at a small fee depending on the fund that you purchase. So now the big question is, should I invest in dividend stocks or index funds? So to answer this question, we have three main characters that we look at. We have Jack, who's in his early 20s, still studying and looking to start investing and building a portfolio for himself. And then we got Jane, who's a young adult, just started working in their first job, earning a good salary which gives her some leeway to start investing. And lastly, we got Ben, who's a father to a young family of 2 children and a wife. So they both earn very similar incomes, but they want to build a portfolio for their kids' university tuition fees in the future. So if you're like Jack or Jane, going down the route of picking dividend stocks can potentially bring you more returns and also help you learn about the stock market and how each type of dividend stock works. So this allows you to get familiar with the markets and explore different options that you have. And because your commitment are much lower at this point in time, taking on a little bit of risk can be something that is beneficial for you in the future. If you're like Ben, who has a family, then something that takes precedence right now is spending time with your family. So this might mean that you have less time to research individual stocks, and having said that, this means that index fund might be more suitable for you in your situation because of the commitment levels that you have. However, these are just my personal opinion, and whether or not you pick dividend stocks or index funds boils down to what your investment style is like. It depends on what your timeline is and how much money you are looking to put up. So for me, I do hold some dividend stocks, which are dividend aristocrats, and I also hold a dividend ETF, SPHD, that pays me every single month. So by doing so, it gives me cash flow every month to reinvest my money and stack those dividends. So if you want to see the breakdown of my dividend portfolio, I'll leave it in the link in the description down below, together with all the stockbrokers that I'm using. And this kind of brings us to the end of today's video. So if you haven't, dropping a like will help us a lot. Subscribe and stay notified for the latest videos that come up. And as always, stay safe, invest safe, and I'll see you guys in the next one.